Hello, Jim here. It's been a pretty rough week in the markets. Today, I want to talk about what I think is going to be happening next. I'm also going to share with you how I like to plan my trades during these kind of times. Back in 2022, I actually did a lot better than the S&P 500, and that was for a couple of main reasons. I'm going to talk about those reasons, what made a difference back then that can also make a difference now. At the end, I'm also going to share with you some of my recent trades that are fairly deep in the money and how I plan to manage them. So stick around. I think it's going to be well worth your while. Okay, now before I jump into the key points of the video, I do want to talk about the market and where I think we're going from here. Now with Doge and Elon Musk and Trump making a lot of changes and laying a lot of people off from government jobs, I do think that's going to be a headwind on the markets. I believe unemployment will go up. A lot of the government workers will have a tough time finding private jobs or private sector jobs. I could be completely wrong, and they don't have issues, but I do think that for a while unemployment will be a bit higher. I'm hoping it's only the first 2 quarters, but it could be a little bit longer. I don't know how long they're going to be running Doge. Originally, I thought they were only going to do it till September, so which I know the Tesla, people who have invested in Tesla probably want Musk to get back to focusing on Tesla and not be doing so much with Doge, but he is providing a really good service. It's been kind of shocking the fact that they don't even know if some people are, have been to their jobs in a long time. So I think what they're doing will have a big benefit. And my guess is it'll be a lot more jobs than most people realize. I wouldn't be surprised if it's 500,000 jobs this year that get trimmed from the government. With 2.3 million jobs, I believe it's overkill. They have too many people probably, and they probably don't need that many people. Also wanted to talk about how the House tax bill, it did get passed. I believe it was yesterday or maybe Tuesday. And I think that's a really good thing. So they're taking the right steps in the House and Senate for getting the tax cuts, the Trump tax cuts, passed later in the year. So I think that's a good thing. And that's probably why the market did okay today, probably. I did have a good day yesterday. But if you look at last week, it was between Friday and Monday and Tuesday. I think we had 5 down days, and I believe the markets were down about 5%. So another 5%, we would be in bear territory. Now, I do believe there's also been a move from technology to value companies, moving from some of the technology big names like Google and NVIDIA over to companies like Coca-Cola and Procter and Gamble. I own a lot of Coca-Cola, and it's gone up. It's pretty near new highs. And same thing with Procter and Gamble and some of the other value dividend companies that I own. So, and then next but not least, I do believe housing is having a tough time. Especially the housing starts. I do have an ETF, I believe it's ITB, that has a lot of the builders and a lot of the construction companies, and they're kind of having a rough time right now, and it's probably related to some of the same stuff I just recently talked about. And then consumer sentiment, which came out, I believe it came out earlier this week, was the lowest it's been in many, many years. So I do believe there's a lot of fear out there, a lot of people worried. Again, it may be related to the new administration and some of the changes. I think they're good changes. I think long term they will pay dividends. The fact that the government has gone from, I believe in 2019 it was $4 trillion that they spent, and then this year it's supposed to be over $7 trillion. I think it's just ludicrous that we have a $7 trillion potential budget. My guess is they're going to keep finding more and more waste and corruption. But like I said before, it will have an impact. I believe it is impacting the markets to a certain degree. Now, some of the other things that are impacting it is also tariffs. This kind of going back and forth related to the tariffs has an impact. And then, as the tariffs are implemented, some goods will be pricier. It will hit inflation a little bit. I'm hoping that Trump and his team make some interesting concessions with some of the other countries, like Canada. Maybe they can make a deal where they eliminate all reciprocal tariffs, meaning eliminate tariffs completely between us and Canada. Might work out really well. I don't know if they'll do something like that, but it could be a pretty good idea. So we do have these headwinds. I'm thinking we're going to continue to have choppy markets, especially over the next couple of months. It may also cause the Fed to cut rates sooner than they were originally planning. But I do think probably third quarter, fourth quarter, definitely by fourth quarter, I think we're going to be sitting at a better position. I do believe the market will probably hit higher highs, but until then, I wouldn't be surprised if we drift down, maybe even approach that 10% or a true bear market. But personally, if I was to bet a little bit of money on it, I do think we're going to kind of trend sideways and slightly down until we get into probably third quarter. So that's my 2 cents, and it's probably only worth 2 cents. So let's next jump into the main key points of the video. Now, my first key point is to pick great companies at a good price. Now, we've recently in the market, the momentum has caused some companies to be way overpriced. I do believe that at times the market will come back to reality and price will matter again. And I believe that's what we went through last week or earlier this week and the end of last week. And I do believe that's going to continue. I like to look at criteria like return on equity, return on capital. I like to look at debt to equity. Is it less than 50%? The lower the debt, the better. Also like to look at year over year earnings. Are they growing their earnings? What does earnings like next year look like or the year after? A lot of times you'll find if you go out to 27 or 28, you might see that they're going to, at that point, maybe double their earnings in the next 2 or 3 years. And it may be a stock that's way down that may be worth holding on to, again, because it's really difficult to time the market. It's really hard to get the lowest price possible for that stock. AMD is a perfect example. At one point, it was over 210, and now it's hit a new low. I believe it's like 103 or 104. So should you try to get that 103 or 104, or should you pick what you believe is a fair price? So if you think AMD is going to be worth twice what it is within 2 years, then you might be not so worried about picking it up at a like maybe 120 versus the 103. So that's how I want to look at stocks. So that's how I typically look at them. And then I like to look at the sector. Seeking Alpha has what's called a valuation tab, and you can look and you can see how the PE, forward PE as well as today's PE compares to other companies in the same sector. It also has an area you can look at valuation. You can look to see how much cash they have, how much debt they have, and then a tab to see profitability. How profitable are they? Not just return on equity and return on capital, but how are they cash flow wise? Are they producing a lot of cash? And those things are all really important. Now for ETFs, I like to use, good quality ETFs that in some ways I find them a bit safer. So that's something else you could potentially do in this kind of a market, a very choppy to, a negative market or a down market. It is primarily look at ETFs. I've had very few ETFs get assigned. I've actually only had to manage very few of my ETFs. So if you're worried about this time period, one thought is maybe do more ETFs. And that's something I'm trying to do. I'm trying to look at some ETFs and potentially do some vertical put credit spreads or cash secured puts on ETFs. So, and then another important point that a lot of people don't realize is I do throughout the year try to keep a good amount of cash. So if you're trading options, I like to set goals. My current goal is 8,000 on a monthly basis. And, I break that into weekly and daily. And if I'm able to reach my goals, even in a down market, like I may still have some positions that are deep in the money, but I don't panic. I will look at making additional trades or trades on different companies at that time so that I keep that cash generating. That cash keeps coming in, week out. And that's how I was able to beat the S&P and the NASDAQ by a significant amount back in 2022, because I had this cash coming in, every week, every month during that time period, all through 2022. And I'll share some of that kind of revenue and what it looks like on a monthly basis. And then I break that down. I usually only do 1 or 2 trades a day. And if I reach the kind of money I want to make, then I don't need to do as much trading. I also don't do too much because I want to keep a fair amount of cash, because when the market does dive, then it's a great opportunity to pick up some great names really cheap. Again, I'm thinking of AMD, Micron, and some of the others, even NVIDIA. If it drops down into the, closer to 100, I think it would be well worth owning more of it, especially around 110 or 105. So, and then with making money on a monthly basis, I like to set goals. I stick to those goals. I increase them if I'm able to reach them. If I've also decreased them at times. So that's become a very important part of it. And my goals primarily are cash based. And you'll see all this at the end of the video when I share with you my what I call my planning worksheet that I release to all my members on a weekly basis. Like I'll have a new one going out on Sunday for March. So for October, I've already reached my goal of 8,000. I'm at, I believe, pretty close to 8,300 currently, and I have another day of trading. So I'll probably still do one more trade tomorrow, but I'll be like around 8,500. Last month, I only did 7,600 or 7,500, primarily because I got sick and I missed a couple trading days because I had the flu and didn't feel up to it. So, and then also doing a balance of calls and puts. So that can make a big difference, because if the market if the market dives, then you have the opportunity to close some of your calls for dirt cheap, and then later when the market recovers, you can sell additional covered calls. Now, I do have to warn you, after the market drops, it's important to continue to sell covered calls above your cost basis and to take a little bit less risk. A lot of times, you can go through a tough time in the market, and some stocks may go way down, and you might be tempted to sell these covered calls under your cost basis, and that can be a big mistake, because again, when the market recovers, it recovers rapidly. In a lot of cases, 4 or 5 days can have a huge impact on a stock price. You could see a stock go up 10, 15, 20% in a matter of a couple of days. So be very careful with selling covered calls after a big drop. A lot of times I'll wait, if the stock has recovered but not high enough that I'm ready to sell covered calls, I'll be patient and I'll wait for that opportunity to sell those covered calls. So having a little bit of puts and calls, meaning you've sold both, then when the market goes up and it gets to new crazy highs like it did, I think early last week, it hit a new high even. Those puts that you've sold then also become very profitable, and you can close them. So, if the market's kind of choppy the way it is, you'll have opportunities to close your positions early. And I typically try to close mine at about 80% profitable. I'm not the best with closing. Some of my members in my membership will close at 50, 60, 70%. I'm cheap, so a lot of times I'll wait, which can be a mistake, because I've found in a lot of cases when I do close early, I avoid, a big market drop. Like I believe I closed Qualcomm early, and now it's dropped. So if I hadn't, I probably would have gotten into trouble. Now I'm actually looking to sell another vertical put credit spread in Qualcomm because it's come down so much. So just a few things to keep in mind, having a good balance between both. And I have almost 50-50 covered calls and then different types of puts. Now I might have an iron condor or two, but I mostly have vertical put credit spreads and some cash secured puts. So next point I want to make is what I call my 10% rule. I did a lot of research after 22 because I had a lot of things get assigned. So I looked at everything that got assigned, and I found that they typically did not get assigned to me early unless they were 10% or more in the money. So I look at that number. So if the strike's 100 and the stock price is 90, then I begin to worry. I begin to think, well, I probably need to manage that trade. But if the stock price is 95, then I don't worry as much. I'm very patient. In a lot of cases, the stock will come back up and come out of the money, and it won't be an issue anymore. Now, ever since I put that in play, which is probably over a year, I've only had one instance where that didn't work, and that was Johnson & Johnson, which is now profitable. But in every other instance, that did work. And I've been amazed at how some stocks don't get assigned to you, even if they're deep in the money. Now, also, when I was researching that, I believe it's the OCC. It's the body that manages the early assignments. And when someone does decide to do an early assignment, it will allocate the early assignments out to different brokerages. And it does it in two ways. The first way is it's kind of a random. It'll pick a broker, and then that broker will randomly pick whoever is going to be assigned either to or away from. The other is first in, first out, and it's, I believe, pretty close to 50-50 on how this is done. So I do believe rolling sometimes will keep you from being assigned early. I think some of the positions that have been around a lot longer will be assigned first compared to some of the others. So again, patience can be a virtue, not panicking, not jumping in and taking that loss. Literally a day or two can make a big difference, and I've seen it happen countless times. And then, I've also had the issue that I've rolled myself out of a great opportunity to own a good company. So don't discount assignment. In some cases, it may be worth your while, to own the stock at that price, because again, if you're looking down the road 2 or 3 years, it may double. Then you'll find out that, well, I got out of it too early, and I missed huge appreciation. Just think of NVIDIA. If you had rolled yourself out of NVIDIA back, I first bought some NVIDIA back in 2019. If I had rolled myself out of that purchase, I would have missed it's my best return. I think it's over 3,000%. My cost basis on my shares is like $6. So just remember, and sometimes, depending on where that stock is and understanding the stock that you're trading and getting a good feel for where you think it's going to be priced in a year or two, look at that assignment. Maybe that's your best bet, because again, it's really hard to hit the bottom. So, let's use AMD as an example. It's at 103. Maybe you could roll it again and get it down to, like right now, if I have a 125, maybe I can get it down to 120, but then it shoots back up in the meantime, and I've missed that opportunity to even own it at 125 because it shoots up to 150. I personally think AMD could potentially be worth like 160, 180 late this year, early next, maybe sometime in fourth quarter. And that's just my hypothesis. A lot of people, I do some pretty deep research. I've looked at where they plan to be. They literally plan to double their income or earnings per share over the next 3 years. And I've dug deep into a lot of what they're doing with their chips, all their different types of chips, all the new industries they're getting into. So I've done a lot of research. I've had other people who, I don't know, it's almost like the stock is down, so it's a bad stock, or the stock is up, it's a good stock. You've got to dig deeper, because those stocks that are like way overpriced, and if you pay too much for them, you're going to be hammered, and that price is going to come way down, and then you're going to find yourself in a deep hole. So just my 2 cents, another 2 cents. And sometimes the best way to learn these kind of things is to see firsthand. So I'm going to jump into my planning worksheet that I'm currently running. I've got one more day after today for February. But I'm going to share with you some of the trades that are deep in the money and what I'm looking at doing and why. So stay tuned, and let's go over some of these, or the planning worksheet for February. Okay, I've opened up my February planning worksheet. This is what I shared with my memberships. I typically will share it Sunday morning or Sunday afternoon. If you're curious about my memberships, details will be in the description. I've had a lot of people joining. It's gotten pretty interactive in the Discord. A lot of people sharing their trades and, asking good questions. There's a learning area in there. There's an area for each of the brokerages, quite a bit of stuff. So I encourage you to take a look. It may be worth your while. I try to keep it less expensive compared to some of the people I compete with, just so it's not a hardship on people to join or to be a member. I do charge a little bit more for my coaching, but that's one-on-one time with me. And since I'm a software consultant, I'm probably still way undercharging compared to what my consulting rate is. So take a look. It may be worth your while. So a quick update about this. So at the top, I keep, what my weekly and monthly goals are. Monthly 8,000, weekly 2,000. I brought in 83.66 so far this month. I've had only one position assigned away from me, which was Pinterest, and it was planned because I'm running the wheel with it. And I'm not a big Pinterest person. I like a lot of the other social media, but I just don't get Pinterest. So I took Buffett's point of only investing in things you really understand. Now I may invest in them again. Maybe I'm missing something, but it worked out fairly well. I think I made $500 in the 2 or 3 months that I've owned them. So made 500 on 3,000 in a couple of months. It's pretty good. Now, I'm not going to go into these trades right now. I'm just going to talk about what I share. So I have a favorite section, some of my favorite companies. I keep it real simple. I used to put option data in here, but the market changes day by day. So, when the market opened on Monday, I found that the option data wasn't accurate. But I do list the companies. If they're green, I feel like they're not overpriced. If they're white, they're not necessarily fairly priced, but they're not outrageously expensive. If they're yellow, they are fairly expensive. So, and then I have trade rankings. This is a piece that I've been working on. We've actually done videos in my Traders Club meeting, which I do have my next Traders Club meeting on Sunday, where the members, we all discussed in the last one about ranking trades. How can we determine a great trade versus a good trade? And when should you throw a lot more money into that particular trade compared to others? So this is something I typically update it. And you can also see all the trades that went against me. Then my checklist, what do I look at to determine if it's a good company, it's a company I want to own. Then I have guidelines. These are guidelines related to, how I trade my puts, how I trade my calls, how long I go out, what kind of strikes, what kind of deltas, things I've learned along the way. And then here is my actual goal. So here you can see I have 8,000. Then I've got every month how I've done. So this month I did 83.66, 75 or 74.96 the month before. But you can see, if you're earning this kind of income, and along the way, I do have some assignments. Some have worked out well, others not so well, like Path. I'm still hoping they get a good earnings report and shoot up, but they might not. The Zoom has worked out well. CVS now has worked out well. It's recovered. Shopify has worked out well. Walgreens, not so well. Polaris, not so well. But Polaris is another one that you got to give it enough time. Over potentially in 26, they're looking like they're going to have numbers like they had back during COVID. Like they might make significant amount of money. So holding them through next year, a $40-$50 stock might be a $150 stock. But I could be wrong too. It could go the other way. Airbnb has worked out well. UPS has worked out well. It worked out real well. Then it had bad earnings and it dropped. But I believe it's profitable again. ACLS is the only one I've ever taken a true loss. So I put those shares to someone else, and I did take a $1,500 loss, which is reflected in the cash flow. So if I went to that month, you would see I subtracted the $1,500 to come up with the $68.54. And then again, Polaris, I do own 300 shares. And then Johnson & Johnson got assigned to me, and it's again profitable, and I've done fairly well with it. Now, what do I like to do? So all of these are trades that I've done recently, and they're still in the money. Now, like Agilent just had earnings yesterday along with Nvidia, and they were very similar. They had pretty good earnings, but they were down pretty big today. I think down $5 or $6. So I have a vertical put credit spread with them. So what are the choices I could do if it's right now I believe around 130, so it's $5 in the money, so it's between this 135 125. But again, the 10% rule. So a lot of times, I know 10% of a 135 is 1350, and I always use it with the short. So if I subtract 1350 from the 135, I'm at like 122, and I do know I believe it was right around 130. Like we can look at Seeking Alpha currently if you're curious. And I like Seeking Alpha. In the description also will be a link if you want to join. I am an affiliate. I will get a bit of a kickback, but it's my favorite tool to use. So if I went to Agilent, now excuse me if I'm not saying that right. Yeah, it's down $6.34, so it's at 128. So has it reached that 10%? It has not. So 1350 from 135 would be like 121, 122. But if it drops, down around 122, 123, I would be a little bit more concerned. So what would my choices be? I could, like here I rolled it out. At the time it wasn't in the money, but I rolled it out and brought in some additional premium. I brought in over 1,400 in premium since I've been trading it going back. Let's see how far. Back since October of 24. So it's worked out pretty well, but this is where if I look at the trade, it would show as a fairly big loss. And if I was panicking, I would potentially trade that and take a loss. So my choices would be, we'll come out here, it's 135, 125. I could roll it out. So a lot of times I'll look at 417, I'll set up a roll automatically with Fidelity or Schwab. This position's in Fidelity. So I will go to Active Trader Pro, and you can actually roll a credit spread in there. And I'll look to see, can I roll it? And if I can I earn around $100 per contract? That's what I typically like to do. Now, if I didn't want to own them and I really wanted to lower the strike price, I can widen this spread. I could do like 130, 115 and bring it down to 130. So that's one choice. I could also look at rolling it farther out. So instead of rolling it to April, I could look to roll it to May or June. I like to trade monthlies, so I would look at the monthly. I believe the monthly for May may be 515 or 516. So that's another choice. Another choice is I could roll it, but then not buy the put, meaning I really want to own this, so I'm not going to worry about buying the put because it's at a price that I really like. So I would roll it and then I would just sell, so instead of, I would close the 135, 125, and I might open a 130 because I feel like 130 is a really good price. So turning a vertical put credit spread into a cash secured put, which can also really work out well. Now, if it got assigned to me early, if it became like Johnson & Johnson and the 10% rule didn't work, then I could also say, well, I want to take ownership of the shares. I've earned nearly $7, so my cost basis is more like 128. But I could sell this 125, which would be worth a lot, and I could put that towards my cost basis, lowering it another $2 or $3. And I've done that with a number of positions. I believe I did that with Johnson & Johnson. For Dell and AMD, I actually turned a vertical put credit spread into a cash secured put and lowered it. I believe I had a 140, 125 at one time, and I was able to get it to a 125. You can actually see, I believe this is AMD right here. Yeah, so I have 4 contracts on AMD at 125. Now AMD is at 102, 103. Could it go down lower? It could go down. It might go into the mid 90s. I still think long term that this is a great stock that could be worth a lot more. Another choice I have that I could do is I could say, well, I'm fine with AMD. I really feel comfortable about owning them. This is two contracts. I could potentially close two and open three and maybe bring the strike price down lower. So maybe I could get it to 120 or 115. So and that's why I like buying the long puts. It gives me choices. I can turn a vertical put credit spread into a cash secured put. I could sell the long put if it gets assigned to me early. I can widen the spread. Now, if you just add a cash secured put, you don't have as many choices. And you also have the choice of putting those shares to someone else, like I did with ACLS. So that's how I do it. And then I have a lot that, like BP expired. One was a vertical put credit spread. I closed some NVIDIA trades. I've rolled some recently. I closed HIMS. I closed IJR, actually expired again. And most of my ETFs seem to just either expire or I could close them for cheap. So I don't want to make this video too long, but that's the kind of thought process I take. Add a comment. Let me know how you like to manage your trades. Do you do something radically different? Do you get fearful and you close your trades, or do you look at a 25, 50% profit and you kind of churn the account more so than I do? I want to own a lot of these companies, which in some cases might be a mistake. I do know some members, all they do is trade options and they bring in quite a bit of income. Now, I'm looking to own another NVIDIA, the future NVIDIA, or another company that could potentially take off and get, crazy long-term returns, appreciation through the roof. A lot of people don't realize, like if you look at Home Depot, if you had owned Home Depot, it also has had crazy returns over the years. Now it's a giant company, but if you gotten on that ship when they were a fairly small company, you have almost similar returns as NVIDIA. Not quite as good as NVIDIA, but quite good. So that's what I wanted to share with you guys. Let me know what you think. How would you do it different? And as always, thanks for taking the time to watch, and I look forward to seeing you next time.